The key benchmark index, Nifty 50, came within touching distance of the 25,000 level before receding from highs. The week ahead will be full of key factors to watch that could potentially push the Nifty 50 past this coveted mark. Here's a look at all the top 4 factors that will impact the movement of the benchmark large cap index. The first is monetary policy expectations from the US Federal Reserve. The markets are pricing in a soft landing scenario for the US economy, and expectations of a rate cut by the US Federal Reserve in September are intact following a decline in US inflation data. The global markets digested the latest US PCE data ahead of a key meeting by the US Fed later this week, where policymakers are expected to set the stage for a September rate cut. So far, the central bank has left rates unchanged since 2023. As a result, Wall Street settled Friday's session with sharp gains, and Asian indices followed the mother market's lead. If the tone coming in from the US Federal Reserve is dovish, the markets will celebrate, and this could push Nifty to fresh highs above the 25K level. FIIs return with a bang. After selling off equities to the tune of 78,000 crore in April and May, FIIs made a meager comeback in June, buying around 2,000 crores. However, foreign investors found their confidence again, purchasing almost 17,000 crores during the month so far, as compared to 8,900 crores bought by DIIs. According to experts, FIIs who sold off their equities in the past few months are now re-entering the same names at higher prices, despite concerns of lofty valuations. Following the budget, DIIs who were sitting on cash waiting for clarity on tax proposals have started deploying funds, particularly into quality large caps. If FIIs and DIIs maintain their bullishness, the Nifty 50 will extend its gains and possibly move past the 25K mark. Changing sectoral preferences. Investors are moving from defense, infrastructure, and realty stocks to pharma, IT, and FMCG counters following the budget. The rally in IT stocks is expected to continue, following the strong results coming in from TCS, Tech Mahindra, Infosys, and Mphasis. The upward movement in pharma stocks is likely to persist after Cipla's impressive Q1 results. FMCG stocks are anticipated to benefit from the finance minister's announcement of a 2.6 lakh crores spending boost in rural sectors. On the other hand, the banking, metal, and realty stocks are expected to underperform. The buying in certain sectors could push the Nifty ahead, although experts are raising concerns over stretched valuations. The final factor is the fall in oil prices. Brent crude fell over 1% to a 2-month low in the previous session, as worries about weakening demand from China and expectations of a Gaza ceasefire deal impacted the oil benchmark. Falling oil prices lowers the input costs for a lot of large companies, which will improve their margins and give them better earnings. This results in a positive outlook for the blue chips making up the Nifty 50 index, and in turn could push it past the 25,000 mark.